Joining me now to discuss this reallocation of wealth, federal tax practitioner David Selig, who checks in from Newsmax, New York. David, we hear the rich need to pay their fair share. That's a pretty good chunk of change they're forking over already.
Well, the reality, JD, is I suspect this is somewhat of an understatement. The fact of the matter is, the wealthy, the most productive, the most successful Americans pay far and away more than everybody else. This administration was hell-bent, determined on a redistribution of the wealth, and they have accomplished that. So much so, great guns, over the top, far and away exceeding their expectations perhaps, that now, fearing being said they would overstate, these individuals, probably trying to hang on to their jobs, have, I believe, understated the actual amount. And I'll tell you why. Because they have departed from both generally accepted accounting principles and the sound foundations of managerial accounting. This is really a lowball figure in my estimation.
So with those caveats, departing from generally accepted accounting rules, what would be your estimate? How much in reality do you think the 1% is really paying in terms of total tax bill?
Close to 50%, JD. You know, there has been a hue and a cry from the administration and from a lot of left-leaning organizations to say the so-called wealthy need to pay more. It's unfair that they have a long-term capital gains rate, that they're not pulling their weight, and that is the exact opposite of the truth. The fact of the matter is, if you read closely this study, they refer to, let's say, the low-income earners really not paying anything. That's not a true and accurate representation of the facts. The low-income earners, the very low-income earners, get back a great deal of money that they never paid in what's called refundable credits. They qualify for the earned income credit. They qualify for all kinds of things. Additionally, the administration has had absolute antipathy towards charitable giving. So they made the tax consequences of charitable giving not nearly as attractive as they were, as it once was. The premise is that these individuals who give will continue to give, and that's just the good feeling that they get from the act. Unfortunately, that did not materialize, particularly when they disallowed a lot of the charitable organizations' ability to be tax deductible. These people had to requalify. A lot of contributors became soured, and now it seems that you know, we're trying to say that they're not even paying what they are paying.
Got about a minute left, not really enough time to do justice to the topic of tax reform, but the debate has been around a long time. A flat tax or a national retail sales tax. With the minute remaining, what would you like to see done in terms of tax reform?
Well, if we're going to address the issue, and I know you have challenged me on this because you say Washington does not really have a lot of common sense, and that may be true, but I'd like to see some common sense applied to our tax code. You know, everyone who is a big pundit of a flat tax and tax reform seems to be conspicuously quiet when it comes to the corporate side of the house. We really need to lower corporate taxation, ease these regulatory burdens, and sort of unwind a lot of the machinery that has overcome business and the economy during the past few years.
Fair enough. We can get that done in terms of tax reform. Regrettably, David, we cannot turn back the hands of time for this particular segment. Our time is up. David Selig, as always, we appreciate your insights, and we're coming right back.